Hi, welcome back to the channel. In today's episode, I want to talk to you about what's happening in the economy in India, and specifically to talk about what's going on with the Indian rupee because it has now crashed to a new all-time low. If we have a look at this chart, it shows the exchange rate between the US dollar and the Indian rupee over the past 12 months. And you can see that 12 months ago, the rupee was trading for somewhere in the region of 84.5 against the US dollar. It's now crashed through the 90 level. And this is the first time in India's history that it's done this. And we expand the scale of this chart to show what's been happening over the past 5 years. You can see that this is a continuing trend. We have seen the value of the rupee falling almost consistently over the past 5 years, but it has picked up pace. If you look at the right-hand side of this chart, you can see that the angle of decrease in the value is now sharpening. And this is a problem for India because it's a net importer. If we have a look at this chart, it shows the balance of trade, and the balance of trade is basically the difference between the value of your exports, so how much money you're being paid for everything that you're selling, and the cost of your imports, so what you're paying out for everything that you're importing. And one of the problems that India has at the moment is that demand for its exports is weakening, so exports are starting to slow down, and the cost of its imports are increasing. So as you can see from this chart, if we have a look at the most recent figures, the balance of trade was negative around $42 billion. And you can see that since June, that has been increasing in every single month. And if we widen the scale of this chart to show the last 5 years, you can see that India has been recording a negative balance of trade in every single month. So what that means is that it's constantly spending more than it's earning. And that's obviously a problem over the long term because you need to be able to fund that spending from somewhere, and that somewhere is going to be debt. Now, just before we go on any further today, can I ask anybody that hasn't subscribed yet, I know more than half of you watching these videos haven't subscribed, so please hit that subscriber button. It's not really a subscription, it doesn't cost you anything, but it does help me with the algorithm and helps to put a smile on my face. Now, one of the other issues that India faces is that the Indian rupee isn't widely accepted. So lots of countries, when they're dealing with India, don't want to be paid in rupees. If they're selling things into India, they will want to be paid in things like US dollars, the euro, or even United Arab Emirates dirhams. That's basically when Russia is being paid by India, it won't accept Indian rupees. So it goes for a middle ground because India doesn't want to start using rubles either. So they've agreed to use the United Arab Emirates currency. But that's a problem for India because even if its exports start to increase, if it starts selling more things around the world, it doesn't automatically mean that there's a demand for the rupee if nobody's actually wanting to deal in the rupee. So what is the impact on your economy when your currency starts to weaken? Well, if you think about it in the context of imports and exports, if your currency is going down in value, so let's say, for example, in the past, the rupee was worth 75 against $1 US. If you're importing something into India and it costs $1 US, you'd have to pay 75 rupees. Now that the exchange rate is down to $1 to 90 rupees, it means that you're going to have to pay 90 rupees for that same $1 item. So that should actually be pushing up inflation. But let's have a look at what's going on with inflation because it isn't moving in the direction that you would have expected. This chart shows the movement in the rate of inflation in India over the past 12 months. And as you can see, in October 24, inflation was running at 6.2%, which was significantly above the target rate of 4% set by the Central Bank of India. But over the last 12 months, we have seen a rapid decline in inflation. And the most recent figure for October shows that it's now coming in at 0.25%. So it's virtually nothing. So year on year, prices are basically the same as what they were in 2024. So that's good news if you're a consumer. But it isn't what the Central Bank of India wants. It wants a 4% target rate. But also, what I've just said about the devaluation of the rupee, you would have expected inflation to be going up because India is a net importer. It's importing things like oil, fuel, food, those really important items. And they're getting more expensive because the value of the rupee is going down. So, why is inflation doing this? And if we look at the long term trend, you can see that India has had a lot of inflation over the past 5 years. On average, it's been up around or above that target rate of 4%. So the current situation is quite unusual. So, what's going on? Why is inflation going down at the same time as the value of the rupee is falling? Well, the reason for this is mainly because the Indian government is supplementing all of the prices. So it's basically keeping prices low so people can afford things like food. Food prices have actually come down significantly in India over the past 12 months because they're being subsidized by the government. So the inflation figures aren't actually showing us the reality of what is going on in India in terms of the cost of those imports. That cost isn't being passed on to consumers because the government is basically absorbing some of it. It doesn't want the people of India to have to suffer because the rupee is falling in value. And this chart, which shows the movement in food prices over the last 12 months, really highlights that fact because we've seen food price increases coming down from a high of around 9% in December 24 to the current levels where food prices are actually falling. So we've got negative inflation. Food prices fell by 5% in October. And that doesn't really make sense when you're thinking about the value of the rupee. Now, there were some good yields in terms of all of the agriculture in India, but that's not explaining why prices are going down so much. This is really down to the government supporting those prices. And the impact of a weakening currency on exporters should actually be positive because it means that when you're selling things in the international market, they become relatively cheaper. So if we take that example of a company that's making something that cost 74 rupees, a year ago, that would have been trading for $1 in the international markets. Today, if it was making something that was costing 74 rupees, it would be costing less than $1 because the exchange rate is now 90 rupees to $1. So this should have a beneficial impact on exporters and mean that exporters are seeing year-on-year increases in their prices. But if we look at what's going on with producer prices, also known as factory gate prices, so these are the price of products when they're leaving Indian factories, you can see that over the past 12 months, Indian producers have actually seen a fall in their factory gate prices. And in October, it was down year on year by 0.1%-ish. The scale on the right-hand side of this chart actually goes from 0.5% positive at the top to 0.5% negative at the bottom. So you can see that the margin of increase or decrease is really small. So Indian companies aren't really seeing any increase in their sales prices, despite the fact that the rupee is so weak. And the reason for this is because they're trying to achieve as much revenue as possible. So they're keeping their prices low. But the problem that this causes to Indian businesses, as we've talked about recently for Russian businesses, is that if your producer prices, your factory gate prices aren't going up, but your input costs are rising, and that's the problem for a lot of Indian companies. They're having to import things from overseas, which are now costing more because the value of the rupee has gone down. It doesn't have as much purchasing power. So input prices for Indian companies are rising at the same time as they're not achieving any growth in their sales price. So that's squeezing the profit margins for all Indian companies at the moment. And this is going to have a major impact on the Indian economy because if lots of Indian businesses start making less profit or even move into a situation where they're making losses, then that's going to make the situation worse and potentially cause a further devaluation of the rupee. Now, whilst we're looking at the Indian economy, I thought it was worth having a look at what's going on with interest rates. And this chart shows the movement over the past 12 months. You can see that 12 months ago, interest rates were sitting at around 7.3%. They have come down over the past year, and they're now running at around 6.1%, which is pretty high, especially when you consider that inflation is now virtually zero. So interest rates could be cut significantly to try to boost the economy, to get inflation going again, because it's now down at a dangerously low level. Lots of economies want to keep inflation under control, but they don't want zero inflation because, as we've talked about before, if you're a business, you need to have an element of inflation. You need to be able to increase your prices to cover the increase in your costs. If you can't, as we're seeing in India at the moment, where factory gate prices aren't moving, then that means that any increase in your costs is just going to be taken out of your profit. And that's happening in India across the board right now. So, what's the summary and conclusion today? Well, I wanted to post this video because India is the largest country in the world in terms of population. Recently overtook China to have that accolade. It's got 1.4 billion people. And it's also one of the biggest economies in the world. It's actually growing rapidly. Recently overtook the UK, and it's on its way to being potentially the third largest economy in the world. Over the next couple of years, it will overtake Germany and Japan. So it's an important player globally. But what we've seen in today's video is that India is now starting to suffer some major problems with its own economy. And those problems are starting to manifest themselves in the value of the Indian rupee. It's now crashed to an all-time low. It's trading at above 90 against the US dollar for the first time in India's history. And this is a major problem from India's point of view because despite the fact that it's a growing economy and it's one of the biggest economies, it's still a net importer. It doesn't produce enough fuel or food to be able to service its own people. So therefore it's importing them. And as you'll know if you follow the channel, they are very expensive commodities to be buying in. So India needs to keep buying all of that stuff in. And as the value of the rupee falls, all of those imports are costing relatively more. Now, in a normal scenario, you would have expected inflation to start taking off because if you're a net importer and the value of your currency is going down, then that means that everything that you're buying in is costing more, and so it should be pushing up prices. We would have expected inflation to be taking off right now. But we're seeing the opposite in India. Inflation is actually down to a ridiculously low level, 0.25%. It's close to being in deflation. If it carries on dropping at the rate it has over the past few months, then India is going to see falling prices. And in fact, it's already seeing falling prices in food. And as we discussed earlier, the reason why inflation is falling is because the government in India is subsidizing prices. So it's basically absorbing a lot of those cost increases for all of the imports and not passing them on to consumers. So this is good news for consumers. But what we've seen also is that it's bad news for producers. So companies in India that are making things, they should also be benefiting from increasing inflation because they're having to pay more out in terms of all of the raw materials and the fuel and everything that they're buying in to make their products. So as a result of that, they would have expected prices to be going up to offset the increase in their costs. But unfortunately, that isn't happening. We're actually seeing producer prices falling at the same time as the value of the rupee is going down and the cost of imports is rising. So that's now wiping out a lot of profit for Indian companies. And the longer this situation goes on, the worse it is going to be for those businesses. They may get to the situation where they're not making any profit, they're actually starting to make losses. And that's a big problem for India because it's a rapidly growing economy and it's got lots of people who need jobs. So the last thing that India needs right now is companies starting to have problems with profitability. But the longer this situation goes on, the worse it is going to get. So I wanted to make this video really to give you an update as to what's happening in India, to talk about the fact that the rupee is now trading at an all-time low, and the characteristics of the economy are not reflecting what's happening with the currency, because the government is trying to manipulate what's happening with inflation, which is obviously beneficial to the people of India. But long term, it's not sustainable because India is a net importer. It spends more on its imports than it receives for its exports. The value of the exports isn't growing as rapidly as it was. The cost of the imports is continuing to rise. The balance of trade deficit is extending, and all of this represents bad news for India because it's spending more than it's earning, and that's not sustainable. It's going to have to take on more debt, and at some point that debt will have to be paid back. So India is now building up long-term problems for itself by operating this system of managing prices. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end. Please subscribe if you haven't done so already. Thank you so much to everyone that's supporting me. If you bought me a coffee, sent me a YouTube super thanks, or signed up as a Patreon, YouTube member, or buy me a coffee member, thank you so much. Really appreciate that. And here's something to put a smile on your face.